Hi guys, can we see that screen? Can we see the archive, the Twitter archive on the right? Yeah.
Yes.
Yeah, awesome. Right. Okay. Right. Daniel asked a really, really important question the other day. He texted me and he said along the lines of, how do I not hold on to losers and how do I stop cutting winners short? Now, it's probably the one of the most important questions to be answered. And it happens to beginner traders and also more seasoned traders alike that you get into this swing of, I see it go green and I panic and I sell just because it's green. Now, this exercise I want you all to do, right? And a reason I want you all to do it is because it will gain confidence in the trading strategy. And it's something that my mentor taught me when I first started out. And I've actually was digging out some of the trade plans that I went through with one-to-one with Tim. And I'll just show you when this is dated. This is dated for a trade plan. Now, this is how basic trade plans can be. This is back in 2007. So that's it's not quite 20 years ago, but it goes to show. And Tim wrote this article about planning your trades, and that was his trade sheet. Now, as time went by, the trade sheets evolved, and they literally got to a point where on the large trades, literally there were over a 50-point checklist. And then we had the start of trade plan that we developed back in 2020. So you need to trade your plan. Now you need to trade the strategy. Now you need to record what you're doing is what I'm saying here. But the exercise is this. I want you to look at the Twitter archive. And obviously we've started doing this now. We've now got a week's worth of signals. And I want you to study the signals. Now, what I want you to do is this. Study a week's worth of signals and mark them down when they trigger. Now, mark them down when they trigger, mark them down as to how long they take. Now, I'm just giving you an example of yesterday. And I've got one there that is effectively what I would class as a losing trade, although it did trigger here. And I want to just concentrate on this first, right? And I've just moved this aside. So if we just look at the time of that trigger, it was 9:35 in particular, right? So we know it's 9:35 and it triggered. And if we take the end of the candle, the maximum you could get out of that is 1.5. So that failed. So that would be a losing trade, yeah? Right. And it's interesting to know how the losing trades pan out. Now, that took, if you look at the time to fail, 9:35 to 9:38. Now there is a trend with this, and the trend is this: losers, pretty much on my system, right, tend to lose pretty damn quickly. If I'm wrong, I'm pretty wrong pretty soon, right? Obviously, as we know, no trading system is 100%. If we are right, it tends to kind of start materializing after about 5 minutes of entry. So if we're wrong, it materializes within 5 minutes and it goes the wrong way in this example here. But if we're right, it tends to within 5 minutes go the right way. So my point is this, and if we look at the time definition on that, is 8 minutes. So then we're starting to see profits. So we're in trade, we're in profit in that trade. Even if you'd got in here, you're still in profit. And then it never turns back. Now, if you look, right, on average, these trades are about 20 minutes long, right? So if we look at this buy as an example, get the charting calculator, if we entered there, just say, for instance, we missed it. So we're going to go on the free bar principle. We don't get in just there. We get in here and we get in here, right? That goes against us 1.5 points, right? To the next sell signal, that does 4.75, right? And again, in the time it takes 10 minutes. So my point is this, right? Generally within this system, if we are wrong, we cut the losers quickly, right? The buys and sells do not instantly materialize into profitable trades. They tend to basically take 5 to 10 minutes to materialize. But then when they do, they then absolutely go in your direction. Now, if we take this sell as an example, that did go in our direction pretty quick, right? That did there. I mean, if you look at the times, because obviously these are not time-based candles, these are actually reversal candles. The time that took to go against go for us was actually 33 seconds. Now, there is this situation where, and obviously we've heard this a few times, and my mentor came up with this. It's not me that came up with this. When I complained to him and said, "Oh, but Tim, things move so fast." This is when he said to me, "Stand in front of a mirror and count for 60 seconds, and then come back to me and tell me that 60 seconds is fast." The point is, you're basically always going to get an opportunity to get into a trade, right? If it goes up here, you don't necessarily need to chase it. You can see there, it comes right back down to where the signal triggered effectively, right, to there. So if you miss a trade for whatever reason, you take a phone call or you just literally, pop to the bathroom, so to speak, then here is a good example that if you're patient, right, from there to there in time is 9 minutes. The S&P is very rotational, right? So if you miss the bus, get the next bus, right? But equally, don't keep on saying, "I need confirmation," and you end up down here, and then you're going, "Hang on a minute, I've now missed the trade." Well, you have down there, right? What I want you to do is look at these archives, and if we look at these archives, and if we take any day that I've put up, right, as an example, Thursday, right, you can see there the cells there. Look down at the bottom, it's 10:39. How long does that play out for? That plays out for half an hour before the next buy signal. Now, someone mentioned the other day, which is a valid point, which we've done a separate video on, when should I get out? The best and most opportunities, the best kind of time to get out is actually when you get the opposite signal. So, or when you hit a level. Obviously, if you hit a level, then yeah, get out. There's no point staying in that for all that time, right? So, but my point is these signals take a while to play out, to be successful. So, but they don't take a while to fail, right? If we took that signal there and said, "Look, I'm going to class that as a failure signal because I got in here," as an example, or that was when I saw the signal go down, it's 9:58. When's that fail? That fails when that's above that signal, right? i.e. there, right? So that's within 10 minutes, literally, just a little bit more, it's failed. So the point is if you see your trade failing on this strategy within 10 minutes, get out, right? But equally, be patient, because realistically, for this strategy to play out, and if we take that one there, 11:20, to the peak of that one, that's 40 minutes later. Obviously, yeah, we did get this big pop, right? But, and if you look at any of these, again, we'll just pick any, have I got any info? Yeah, I've got, right. Okay, so I've got that last Monday as an example. That's a failed buy as far as I'm concerned, yeah? But that is a really good buy. Obviously, 39 to 50, you lose 3 points there, you gain there. I mean, I can actually make money off these, right? But you have to be aggressive and you have to go in really quick. But then you have to get out at the 1.75 mark to basically make it work. right, on these. So as soon as these drop back down on the existing contracts, I get out at 0.25, right? But for you guys, if you're getting in a little bit late, i.e. there, right, and then it doesn't go your way, get out. Get out when it's there. And if you actually look at that, between that period, it's 6 minutes. That sell's obviously a perfect sell, right? And that doesn't come back. That's a one time frame in trade down, right? In that scenario, it is harder to get on board if you miss it. Obviously, if you miss it, then the way to get on board is stop above the previous high of the previous candle, and then take that as your risk rather than risking off the high here. That's your risk. And obviously, if it goes against you, and I say, for instance, that's 1 point, 2 points, then you take the hit. But it's not a reason not to get into it. When you see it's there, you can see there that is riding the channel. As soon as that's riding the channel, right, that is trending down. That is not oscillating. That is oscillating. And the way to look at oscillation, right, with this is this. 10:09 there, right, up there, 10:15. 5 minutes later, we're back breaking this, right? And then obviously we're back up here a little bit later. But my point is this: study the strategy, get confidence in the strategy. You could do demo trading until you're confident, right? But don't hold on to your losers. Do not hold on to your losers, right? Get in when you see the buy or sell. Take every single signal, right? And if the signal fails, don't cry about it. Move on to the next signal, because it's the next signal that might be your big buy, or big sell. Prime example is that. If you'd have lost on that, you certainly wouldn't have lost on that, because literally you've got that sort of leverage. And actually, if you look there, there's a few points down, and that's well within your stop tolerance. And literally, for me, I'd be getting in here anyway. I'd be waiting until I hit this level before buying on this level. Because remember what I've always said: if you get a buy that's so close to a level that's just come in, right, price is going to gravitate to that level, test that level, and then go back up. So, but you get my gist about the key thing here is study the signals, see how long it takes them to fail, see how long it takes you to win, right? And then have a timer. Have a little timer, like a salted timer. And literally, I'm going to show you, because I have one on my desk. 2 Sexy says, where's my... I hate these. What do you call it? These Zoom controls. I'm always losing where I am on my Zoom, but so that's a different story. Anyway, I will show you this so you can see. Right. And just going to stop the share for 2 seconds. Right. Can you see that, guys? Yeah.
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 Right. All I do is this, right? Set the timer on 5 minutes. And then when it beeps, I know that I'm out of my kind of red zone, so to speak. Whenever we are just in that kind of zone where, and I'm just going to switch back to the screen one. Whenever we're in that zone where basically, and I'll just take the video off just so we can see, more of the screen, basically. Whenever we take the trade, the first 5 minutes is when we're nervous, right? That is when we're saying, is it going to go for us? Is it going to go against us? And you don't know, right? Until you have the result, right? You have to trust the system. You have to trust the strategy. If you don't trust the system, then hopefully the archive will basically make a massive difference. I'm going to post every trade up every day. Maddie's asked me to do that, and I think it's a really good thing to do. It's transparent, and also it builds your confidence in the system, and you can go back and study it. You can look at it and go, right, because what I've been saying to you guys is first 2 hours, those are your best signals, right? if we look at signals outside that time, right? I just want to look at an afternoon as an example. You basically don't have as good signals. Obviously, that sell goes against you. It then does go that way, but it's outside the risk tolerance. If you look there, it's just outside the risk tolerance, right? Because they can manipulate price a lot more on lower volume, right? We have this buy that doesn't follow through really, really well. That obviously that buy does, right? But my point is, especially when you've got low volatility, look at this. We're in this grind trend situation, right? This is an example when the trades don't go well, right? Obviously, if you get that, you're going to get that, but you're not going to get that one. That's a failed trade, and that's a failed trade. Obviously, you've got that one, which is a successful trade, right? And obviously, that one was potentially would be okay, but that one's a bigger one. Do you see what I'm saying? When you get to this magical period between 9:30 till 11, these trades play out really, really well, right? You've got to sell there, right? Down there, and obviously, if we measure it, right, you've got 12 points, right? I'm going to copy and move that one. Oops, 2 sets, wrong one. Get my chart calculator. Look at that one there. You got 22 points. That's a monster, right? If I'm really, really good at executing here, right, and I get this here, yeah, I'm going to get my points, but you're going to come out with practically nothing in comparison. And if you look at that again, you're going to get your points, but again, you're out with practically nothing. That one's definitely a failed trade, right? So has anyone got any questions on that? And has that helped? Anyone there?
No questions.
No question helpful. Yes.
Yeah.
Yes, I have a question.
Go for it, Rick.
So on the looking at the I think you said it was a 20-point trade, the one right in the middle of the cell.
Yeah.
So I think that I struggle with, well, yesterday I struggled with staying in the trade. Like I could have been in it in the long trade that you put in WhatsApp, but I jumped out and when it changed. So if I follow it down, there's 2 long red candles, and then it goes to right about in the middle of that, touches the yellow, goes to the green, red, green, and it's going up a little bit, and then it comes back down. Yes, right in there.
Yeah.
So I'm just wondering, like, what should I be thinking in that moment where it's reversed just a little bit, and then it's coming down, it reverses a little and comes back down?
Well, this is the whole point of this exercise, Rick. If you look at the trade archive, you'll see these bigger swings, i.e. from the outside to the inside, i.e. these inside, that there's an inside swing, right? Very, very small swing, right? This is a major swing, what we class as a major swing within on the chart, right? When we're looking at these, yeah, right, then do a time filter. I mean, basically, if we look at that as an example, I'm just going to move it because it's just off there, right? It's 10 minutes. Stay in the trade for 10 minutes. That there is what I class as a balance point. Now, when we get a balance point, basically, and I'll just show you this just as an example, right? I'm just going to highlight it in yellow just so you can see it. That there is the balance point for the swing, right? So basically what we say is as above, as below, right? So when this stalls out here, there's a high likelihood if this doesn't get broken, which it doesn't because you get a lower high there, this will do equal length from above to below. Now, it doesn't quite do that. I mean, obviously, we'll give or take like $2, but it's a 4,500, it's a 4,100 stock at that point. So when you here, right, the question you need to be asking yourself is this, right? The reason for coming out is, right, have a good time for the thread to breathe. I'm looking at 10 minutes. So at that point, if we look at that, yeah, you've been in that trade physically for 5 minutes, right? So the trade's only just beginning to start to trade, to breathe, right? The next question is so your time filter, you're at your 5-minute time filter. Now, remember what I said, a trade will normally, on our system, either fail within 5 minutes or follow through within 5 minutes. And if it follows through within 5 minutes, generally, the trade will then follow through further for 10 minutes, right? And literally, just give me 2 seconds. Just going to show you this as an example on what we said. Just going to put it onto that chart there. Good. I'm winding this out. So again, we're using test results to prove what we're actually saying here, Rick. Right. This is backtesting results for the bot. What we actually did is set targets 1 to 9, right? And then to just gauge where we should be coming out. Now, this is not a strategy that I would use actually live in production. This is a strategy to use to actually identify the target points. Now, the target points, what we identified is once you got past 5 as a general rule, then you're probably going to go anything between 9 to 15. Now, to give you an idea, this first trade here does 8 points on the short, takes 10 minutes, right? This one takes 20 minutes, right? This one takes 20 minutes. This one takes 20 minutes, right? This fails, right? That takes 2 minutes. Yeah. This takes 1 minute to fail, right? This takes, do you see the stats? 1 minute to fail, right? So if you're going through, you're following through, it's going to be 12 to 20 minutes, right? On these stats. There we go. There's another one there. Follow through to 8 points, 10 minutes, right? Sometimes it's as long as half an hour, right? The point is right? Just trust the stats from a point of view. Come down here, then judge your trade on this point by price action. Now, what I basically mean by that, right, and just to put price action on the screen, won't be a sec. Just gonna. Right, this maps out higher highs and lower lows, right? If we are trending up, we see higher highs. If we're trending down, we see lower highs, and we also see lower lows, right? So if we're trending up on the other side, we would see a higher low, right? Now, in this instance, we see a higher high and then a higher high, and then it breaks down, comes down, paints a lower low. At that point, Rick, yeah, market structure is telling us do not get out, right? Do not get out, because the job of this swing, just to let you know, is to break this swing. So we swing up, and then we swing down, and then we swing up. Right? The job of this swing is to break this swing. If it doesn't break this swing, then we are bearish. So market structure is broken at that point. Now, if you just look, if we're really, really punitive about this, it breaks it by half a tick, 2 ticks, right? Whenever I see that, that is automation in progress. I remember 90%, about 80 to 90% of the market is run by bots. And basically we've broken that structure by a very small amount, and then it tanks. And that actually coincided. No, that particular one didn't coincide with news. But look at the technical side here. When you're doubting and going, right, I'm here just as an example, and it pops to here, right? And you're thinking, it's popped 3 points, right? Should I get out, right? Well, the job of this swing is to break this. At that point, there is no point getting out, right? And then look carefully at where the next candle opens. The next candle opens lower, i.e. the open here is lower down than the open of this, right? And then obviously, sorry, the close of this, because that closed there. So that went from there to there. I'm just going to put it on OLC because it's just easier to see visually. Right, I'll just zoom out on that. Just so we can get this right from a point of view. This is when you get to this point, it's like, you it's a granular situation, right? So that pops up, right? At that point, yeah, the job of this is to break this. It fails. This opens up lower down than this close, right? The job of this candle on a granular candle by candle basis is to break the high of this if we're going up. And obviously the job of this candle is to break the low of this if we're going down, right? So then we pop up. Now, obviously you will have market noise and oscillation because obviously, you've got the buyers and sellers fighting it out, right? At this point, yeah, right, it comes up and then it comes down. That has done its job and broke on a lower low in trim, right? So again, there's absolutely no point in getting out. But we're looking at market generated information here. And the point is here is we've made another low low, made it within 5 candles. We've seen a little bit of consolidation, right? We're not necessarily going to get out of the trade now, but we just need to keep his eyes out as to what's happening, right? Because literally you can see this is starting to curl. It's not curling yet, but you can see it's starting to curl. Because what happens is, and obviously this is something that we keep a close eye on, this has hit this yellow band, i.e. the Bollinger Band 3 band, right? That is the lower low, right? We then get a lower low inside the Bollinger 2 band. At that point, we know we're going to reverse, right? Statistics tell us this, right? Do we get out? No. We get out when we see a CIB. What do I mean by that? A change in behavior, right? So this comes down, right? Again, we've painted another lower low, right? I'm not interested in getting out. As soon as I see that, I'm interested in getting out, right? And I'd get out, literally get out, and I'd actually reverse my position. Has that helped?
Yeah. When does the recording come out for this topic?
I'll put this up as soon as I possibly can because it's an important one.
Yeah, I need to go through it again.
Yeah, it's one that if you watch a few times, it'll make a massive difference, right? And if you do the exercises a few times, now what you've got to take into account, guys, yeah, you are programmed, as in people are programmed, we are programmed, I am programmed to protect ourselves right from day one, right? We're also psychologically programmed to protect our capital, right? It's how we've been brought up, right? So when you see price racing down, right, it is not in your natural responses to actually place a buy, right? It's actually in your natural responses to jump on board and actually do a sell, right? But obviously by that point it's too late because obviously then in this instance we're then dealing with confirmation bias. We want to see it coming down. We then enter the trade and then we should actually be getting out, not getting in. So, but the point of the exercise is this: if you go through the Twitter archives, get a gist of, oh, it takes 5 minutes for it to fail. Oh, it takes 15 minutes for it to follow through. The point of the matter is why, guys, are you getting out after 3 minutes? Because if you're getting out and you're getting in here and then you're getting out here, what is the point? Right? We're in this for the big money. We're in it to not take the risks. So we're always trading at the extremes. but we're in it for the best trades. Now, obviously, we've developed this strategy where we do 1.75 free and then let the runners go, right? Your idea of your 1.75, folks, is for if you are risk averse, right? As in, let's cover your trading costs, let's cover your commission costs, and then literally let the trade follow through and then literally make your money, so to speak. But 9 times out of 10, unless we have a catalyst, yeah, right, we do not see price move very quickly. Now, to see a catalyst, that these need to be running in the hundreds, right? And you'll see that happen on Fed days, or you'll see that happen on where there's big news out regarding, say, manufacturing and something like that, right? The point is this, and that's another thing to know. If you're here, Rick, right, and you are seeing this as an example, you're seeing 2.3 in your favor, then why get out? If it's a 2-to-1 ratio, why get out of a sell at that point? Because the buyers are still in control. Now, conversely, if you're coming to here, Rick, and you're seeing this saying 1,000 and this saying 100, right? Then get the hell out, because you know it's just price is just going to go and reverse. That's what that's there for. It's absolutely priceless, and it helps us massively. Timing for getting in trades, but also for timing of getting out of trades. Because what you'll see is when this race down, as this races down, you'll see these correlating. You'll see this higher, right to here. And then you'll see this switch very, very quickly. You'll see that go to there, and that'll be double what that is to push this back up. Now, the other thing is when it's momentum, when we've got momentum, you can see here we've got a 3-to-2 ratio, right? And it'll be slowly going down, right? To stop the sellers in its tracks, that then needs to triple, if not quadruple. And hence you'll see the reverse. Hopefully this has helped. So, and I think I've pretty much covered everything that I wanted to do, but reiterating, those are the key points. Look at the archives and think twice when you're coming out, and use the timer if you want. Use the timer. Yeah.
Can I ask another question?
You can ask as many questions as you want, Chris. That's the whole point of AMA. Ask me anything.
Entry. Sometimes you get a signal flashing, and I know you've said this before. You could take it on if it's flashing, if you want to be aggressive. And then if you want to be a little less aggressive, more conservative, wait till it stops flashing. I've missed some trades because I think actually that cell that's in the middle of the screen, I think I might have missed it because it started dropping, and then I felt like I missed it.
Right.
I know you kind of already talked about it, but I'm just wondering how should I just, if I'm going to do 3 targets, should I just put those orders in and then just wait?
I'm going to elaborate on it, right?
Yeah.
There's a time to be aggressive and there's a time not to be aggressive, right? I'll tell you when is not time to be aggressive. You can see this is our range, right? We're 180 down to 150, yeah? The time not to be aggressive is if we got a signal here, right in the middle. If we're at the peaks, yeah, you can be aggressive. If you're down here and you've got a truckload of volume here, you can see here, you're looking at the volume profile here on the right. That's what's going to stop these sells, these buys going further up. That's what's going to stop it in the tracks. So when you see it flashing, right, if that's flashing in the middle, i.e. here, I wouldn't take it, Chris, right? I'd sit it out until you see the next candle draw and you see the sell stay permanent. But if it flashes here, then I'd take it every day of the week, because you've got 2 things going for you. You've got you're overextended, you're at the yellow, and then you've also got the level. You've got the institutional volume levels that we've identified that we will see technical resistance at, and obviously in this instance we have. So obviously when you come down here, you see a double signal there, you're seeing the buy down here as well, and you're at a strong support level. Again, it's also a specific number, 4150 or 4100 as an example, which is sorry, 4100 or 4200. You're always going to get support and resistance at those levels because they're specific numbers, i.e. the 50s and the 100s and the 25s. So take it in context. Where I think the first thing you should be thinking about is when you're taking a trade, yeah, and you're seeing these signals coming up, right? If I'm an aggressive trader, right, and what I mean by that is, as in, I'm going to take every signal, right, and I'm going to take it quick, right? Then there's a time to be aggressive, and the time is not when we're in the middle. Right, because this is mean reversion trading, right? We're trading the extremes. So you've got to really look at where you're at. But if you see a flashing signal at a high level, yeah, take it every day of the week and get in as quickly as possible, and then just let it trade the way it's going to trade, right? If it fails, then reset to your 3-point stop and then reset. We had a scenario, and I think it was actually yesterday, where we had a reset scenario where I took a trade, and because my entry was not the best of entries, I then reset. That one there, I didn't get quite there. I didn't get the right entry. I got out for a break even, right? So I then took this trade here, and then obviously that followed through, and it gave me 8 points in the end. So I have to take every signal. That was one that literally wasn't the middle of it was the middle of the road, so to speak. You can see there, middle of the road, less likely to play out, right? It's a lot less likely to play out unless we're fully extended. So, and if we just paint the volume profile from a point of view of where we were at that trade, yeah, when that sell came in, folks, right, we were not at an extreme. We were nowhere near an extreme. We were middle of the road. And obviously that's the low, that's the high. In that instance, yeah, you take the trade or you don't take the trade. You don't need to take those trades. Look at the ones that have played out. They've played out. They've played out. That hasn't played out. That hasn't played out well. So with these middle ones, what you do need to be is aggressive at getting out. I can take those trades and make money, right? I can be in those trades. And if you look at that, if I'm in there, right, goes against me by 0.75, get down there, I can get me 1.75 and then break even at 0.25 on the previous contracts. And if I'm getting out at 0.5 stroke 0.25, I'm covering my commission costs, right? Now, obviously, if that follows through, great. I just hold the contracts and just let it roll. But what I don't want is I don't want a loss on these. I don't want a loss on these. I want to get out as quickly as I can if I'm wrong. So, but equally, you've got to go in with your trade plan, because if you think about it this way, if you're looking at the bigger picture and going, right, well, we've been overextended at 4,200 at this point. Yeah, we know that's where we've seen this previous reaction. We've seen support at the 4,180 mark. I mean, at this point, we're right in the middle of the road. Well, middle of the road trades are the highest risk trades of not playing out because they can oscillate both ways. Because what you've got to take into account here is if I have a 3-point stop and we have this situation where we've got this ATR of about 2.5 between this oscillating between high and low, Just hypothetically speaking, say if I had my stop at 1.75, I'd get stopped out either way if I was short, if I were long, right? Which is what most traders have on the S&P. We have a bigger stop purely because we've done the research and we know that 3 to 3.75, depending on what the ATR is and depending on how volatile we are, tends to keep us out of the trades that basically we just see an oscillation in price. I just seen that happen there. So, but my point is this: quite clearly there, and all you need to do is draw a retracement on your screen. You've got the information there. That's the high, that's the low, right? I'm just going to highlight this in yellow because for some reason it always seems to draw it in this dark green, which annoys me. Do need to change that. That's your 50% retracement. So we are currently middle of the road when that sell comes in, right? Take that in case in point and think, right, if I'm getting in, I'm going to be aggressive at getting out, right? But if you're up here, I get in, I'm getting be aggressive at getting in, but just let it play out. When you're at these tops and bottoms, now in this instance, this came down a lot. This one's more of an example. You see big fighting. You see the consolidation phase. Obviously, we've had the distribution, and then we're getting the accumulation to then go up. So you have this fight on, but look at your range. Your range of that fight is 5 points. So once you pass that 5 points, comes down, you're home and dry. Once it breaks that there, then obviously, as you know, it plays out to the upside. And job were a good one. Does that help, Chris?
Yep. Thanks.
Awesome. Any other questions before I stop record and we jump back to live trading?
Yes, I have one last question.
Go
So
for it.
in terms of time, the failed trades fail within a minute or, quick, but the successful trades can go on for 5 minutes, 10 minutes, 15 minutes, whatever. But the point is that the failed trade is a quick trade, or I'm sorry, I'm not sure exactly what to say, but the successful indicator is going to be a 5 or 10 minute trade essentially. I saw you have your timer, and it's saying that just hang out, stay in the trade. When I feel personally like I want to jump out, just hang in there because the successful trades are longer.
Correct.
Something like that. Can you summarize maybe? I'm sorry.
I can summarize it, and there's a good example of it here. Right, these are your quick and easy scalps in and out, right? And you've got to be quick on these, yeah? But this doesn't follow through for being a big trade. As you can see, it's tanking. But you can get in and can get out for 1.75, right? But if we look at this as an example, as a good example of this one here, right? So your buy signal comes in there, right? You by that point you've got your 2 points there. It goes right up to 2.5, so you've got your 1.75, right? But it then starts going against you, and it should actually look here, which is where I'd be looking to get out, right? So at that point there, right? If we just look at the time difference, that's 8 minutes, right? So we've got some heavy consolidation there. That's 8 minutes. We've got a big fight on here. Right, if we move that across to the next buy, right, that actually fails a lot quicker, right? So obviously, if we come, and in fact, we get quite a few points out of that one, but these are failing quicker, is the point, than on a full swing up. This is obviously the time that this is. It's 4 a.m. So these will take a lot longer. So that's a point to know. If that was during the day, that would probably be 2 minutes, right? So, but if you actually look at the swing from say, for instance, just in this instance, right, from here to here, that's moved down quick. It's actually 30 minutes, yeah? It's 3 times longer, right? It looks like it's quick because of the big moves, because remember, these candles are not time candles. So it looks quick on the chart, but it's actually in time, actually a lot longer. So if you look at the stats, which is what I've done, and this is why I've done all the back tests. The back tests are, Rick, it's 3 times longer for the actual trade to play out. 3 times longer. So it takes effectively 3 times longer to get to 9 points than it does to get to 3 points effectively. So the summary is this. Just hold your nerve. On these instances, if you're in at the right point, then get out after 1.75 once it reverses, i.e. 0.25, right? So you're getting out with a small loss or a small gain in that instance, right? Never a big loss, right? So don't think, all right, we're going to let it hold and we'll reverse and so on. Get out, then wait for it to reset, right? But we look at, and I'm just going to show you just very quickly during the trading day so you can see the difference in speed, right? That sell there in time between going wrong is 1 minute, right? Now, if we then take that buy signal to there, right, which is still a decent signal. It's still a decent amount. I mean, basically that sell came in there. Yeah. If we look at the time difference, it's 8 minutes. So it's 8 times as long, right? Obviously it's fast because it's right at the beginning of the trading day. We've got high volumes, but it's still 8 times longer for you to get your money than to lose your money. Do you see what I'm saying?
Yes.
So moral of the story is trust the system. If you're panicking and thinking I should get out, look at your timer and go, oh, right, I've been in this trade 2 minutes, right? It's doing nothing. What should I do? Well, then look at price action. I look at market structure, right? And then if you're still unsure, just talk to me. Just ask me. Just say, Chris, what do you think? Should I be getting out or should I be staying in? I'll give you my opinion.
Awesome. Great. That's super helpful.
Cool. Awesome. Right. I think we've pretty much covered it all on that. It's been a bit of a longer video, but I think it's been worthwhile.